Hi everybody, welcome to the webinar on Tradies Accountant, job costing and job reporting with Modus Operandi. I can see people starting to come in, so we'll just give it a minute or so for everybody to kind of get on board before we start. Yeah. On your bottom bar there, you can press the raise hand, or there's also the questions tab there. So if everyone can hear me, just click on that raise tab and then I'll lower hands. Yep, see people starting to raise their hands. Yep, excellent.
Hey Steve, good to see you. There's a few common names in there.
All right, we'll just give it a, we're at 11:01, so I think what we'll do is we'll get started now, and then anyone else can just jump on. Obviously, we're going to be recording the webinar today as well, so anybody that hasn't managed to make it or that misses a bit will be able to get that opportunity to catch back up anyway. So yeah, the webinar today is going to be able to how to improve your profitability through job costing and different reporting. So today we've got myself presenting. I'm the partner CEO at Tradies Accountant, and I help clients improve their profitability, increase their cash flow, and work on their business. And we have Tiffany with us today.
Hi everyone, sorry you can't see my live video. I did actually do my hair for the occasion, but we've got some technical difficulties, so you've got my placeholder instead. But good to see everybody.
Excellent. Okay. Oh, just some housekeeping at the start. We're going to go through, we want to keep it quite interactive. So anybody that wants to ask questions, just feel free to ask questions and we'll try and answer them as we go along. Like I've already said, we're going to be recording it, so everyone will get a chance to get a copy of the recording. We've got a couple of polls that we're going to ask during it as well. So yeah, feel free to ask questions and we'll try and answer them as we move along. I think the first poll actually we're going to launch off the bat was just what software people are currently using. So I might just launch that one and give 30 seconds or a minute or so for everyone to go through and answer that. While I do that, we'll just move on to the next. Oh yeah, we've got some answers coming through.
How are the results looking?
Oh, like it looks like predominantly SimPRO.
Hey, okay.
Yeah, 63% SimPRO, 25% Buildertrend, and 13% Nextsphere at the moment.
Okay, good little mix.
There's still a few to answer. We'll give another 30 seconds and see how we go, but it seems like predominantly SimPRO. And that number moving, that percentage moving up.
We should have bet on it.
Yeah. We've got 10% other. I wonder if others Excel spreadsheets.
Maybe. Or their accounting package. Potentially they're not quite at the point for job management software yet.
Could be. All right, I might close that poll up now, but it looks like the end result, 60% SimPRO, 20% Buildertrend, 10% Nextsphere, and then 10% other.
Great. Okay, good little mix. Look forward to it.
Excellent. Some very good softwares there as well, so that's awesome. So yeah, Tradies Accountant, just to give a quick intro. Try adding a Scoro was a question. Okay. Yeah, so Tradies Accountant, what we offer is accounting and financial advice to trade businesses. So we only deal in the trade space. We deal with contractors, builders, shop fitters predominantly, and we provide specialised advice because it's only in that trade and construction sector. We offer a range of services from accounting, bookkeeping through to consulting. So that's just a little bit about the company and what we do. I'll pass on to Tiffany now so she can explain what her company does.
Thanks, Bryn. So Modus Operandi work again specifically with the trades-based businesses, trades and construction, and we work to really automate and optimize software. So we look at either how to implement your job management system or how to optimize it. And it's all based around matching your system to suit your business requirements. So not so much just using the off-the-shelf product, but how can we adapt the system to really suit what you need?
Brilliant. Awesome. All right. Well, let's kind of get into it then. Oh, yeah. First, we have some of the clients we work with. So this is some of the clients that Tiffany works with and some that I work with. Basically, we start from the contractor that might have 2 to 3 people on the team, up to some shop fitters that run reasonably large operations, up to national organisations. So anybody in between that space in the construction kind of industry, that's where we focus our time. I don't know if you want to add anything to that one, Tiffany.
Yeah, we're about the same. We've got a couple of examples in there, but a lot in, like we said, the trades and construction space around plumbing, security, electrical, and everything in between. We have a lot of specialist clients as well that use the software to suit any service-based business that have technicians going out to site.
Yep, excellent. And that's all over Australia, Tiffany, as well, or is that?
Yeah, all over Australia, New Zealand, and even some in the US these days. So
yeah, wow, exciting.
Yeah, I guess it doesn't matter, right? We're cloud-based, so wherever you are, it's just waking up to the time zones.
Yeah, that's 100% it at the moment. I think everything now being cloud-based and access, and most things seem to be via email, via phones, or through that, especially through COVID as well. I think it's just fastened that speed up of how everyone's transformed over to technology. So we're finding that with us as well. So I think, Tiffany, you'll be able to go through this.
Yeah, I'm going to go. We've got a jam-packed day today. Just a couple of things, like Bryn said, we're hoping to take about 35 minutes of your time, but it will be recorded for you guys to watch later as well. So why do you need a job costing software? What is so important about that? How is the job costing system recording key metrics? It's often something that's not completely understood. So we're going to go through those today. Managing your jobs using both systems and processes. The types of reports you should be reading. And this is a question I know I get often, and I'm sure you do as well, Bryn. How often we should be looking at those reports, and what exactly is that transfer or sync of the accounting data from your job management system to your accounting package. And of course, the importance of job costing and the benefits of reports to sum it all up.
Yeah, awesome. Excited. Well, let's
Jam-packed.
Jam-packed, yeah. Hopefully we can do it all in 35 minutes, as you said. All right, let's get to the first slide. Like, why do you need job costing software? There might be some people on the webinar that don't currently have job costing software, and they're wondering what the benefits of that are, or they're just seeing the headline thing, which is the price of it. And is the expense or is the investment worthwhile in using job costing software? So these are some points on why we'd need to use it. And obviously, as an accountant by trade, one of the first ones is if you can't measure something, then you can't improve it. So to be able to track the profitability per job will let you improve the profitability per job. I've dealt with a lot of clients, and if you just have a macro level, so if you just have their Xero file or their QuickBooks or Maya or whatever they're using, if you can just see the profit and loss on an overall view, it's very hard to be able to advise them on where to improve that profit without seeing the individual GP or gross profit percentages per jobs. So definitely that profitability is a main aspect of why you'd want to, implement a job costing system or software. And I guess why use a software as opposed to maybe doing it manually. If you're a builder, having a whiteboard on the I've heard builders have whiteboards up with their income and expenses on there. And obviously, as we've already touched on, technology is really everything these days. So technology is generally going to speed the process up, make it faster, more efficient. You'll use less people. It will make it more scalable, and it will make it also less chance of having error. Obviously, technology might create their own errors inside of that, but generally, you're probably going to reduce manual errors by using a technology or a software. So all in all, it's going to make the business more scalable. You're going to be able to increase your profitability. You're going to be able to get rid of a lot of manual processes, making it more efficient, yet again, more profitable. And And then the last point I had there, and there's probably a lot more points than this on why you'd want to implement something, but these are some of the main ones that I'd come up with, is measuring your stock on hand and WIP. So if you're a builder, you don't have stock on hand, you might have a little bit of stock on hand, but it's generally work in progress. So you want to be able to measure that work in progress. And if you're electrician using SimPRO, it's probably measuring that stock on hand or stock per van or something similar to that. So if you're not measuring your WIP or your stock on hand, the challenge that you face is that your profit and loss is going to look very lumpy. So 1 month you make a big profit, next month you make a big loss, next month you break even, because you're not actually measuring where the stock is. So everything's getting expensed through the profit and loss.
Yeah, there's so much in there. And all of my clients that are on this call now know how much I bang on about how important job costing is in your software, and that's why it's there, right? One of the main reasons you implemented the software was so that you had a better understanding of where you were making money and where you potentially were losing. So it really gives you a good understanding. And the other point that I'd probably add to this list as well, Bryn, is to get better control over what your staff are achieving. You know, being able to set some really good performance measures in place and say, this job has tracked really effectively. You know, the estimating team have done a phenomenal job at getting this down to a T. Or is it that, you know, estimating aren't quite on point or the projects team aren't quite on point? So it gives you that ability to see which division of your business needs a bit of a tweak.
100%. Yeah, I mean, I had that issue with a contractor yesterday where he was looking at bonuses for his guys and didn't know how to work it out. And obviously he wasn't job costing. He didn't have a job costing software. And that was one of the things on there. Without the job costing software, he didn't really know how to reward those team members or how to reward those supervisors when the jobs were going well. So that's a great point.
Yeah. Yeah, definitely something underutilized.
As we go, just feel free to ask them, and we try and answer them as well.
Yeah, absolutely. Bring the questions in. We always like to feel like we're having more of a conversation. So how the job costing system records key metrics. So this is a really important one. And there's essentially 4 major points in terms of how your job management software will record this data. Now, bearing in mind, this can fluctuate a little bit between the different software systems you're using. Okay, so just keep that in mind. This is best case scenario. So the likes of something like SimPRO would cover all of this. Something like Fergus would be a little bit different, and Buildertrend normally seems to encapsulate the largest majority as well. So just bearing in mind the system would be slightly different. So employee costs, what does that mean? And lots of people go, oh, that's okay. You know, we've captured the pay rates of our employees. You know, he's getting paid $35 an hour. Well, that's great, but what about all their on costs? And when we refer to on costs, and Bryn, you're the accountant of the group, I'm sure you can talk to this more than I can, but the on costs of the group refer to how much leave are they taking in terms of sick leave and annual leave? What is their superannuation? Are you having to pay payroll tax now? Have you hit that threshold? So all of these on costs really start to increase the cost of that employee to your business. And so that employee isn't any longer $35 an hour to you. Their base cost is probably something along the lines of somewhere between $50 and $65 an hour, depending on how well you've got those on costs. The overhead costs are all of those costs for you to walk in, turn on your lights, open the doors every morning. What does it take, irrespective of whether you're getting work or not? What costs are you incurring? Your rent, your electricity, your telephone costs, those don't change. They're fixed costs. And those overhead costs needs to be covered across all of your billable staff. So when we talk about employee costs, it's a mixture of those 3 things. And it's really important to encapsulate that, because the pay rate and the on costs will give us an outcome of gross profit. What does it cost to deliver the job? And the overhead cost will then give us the outcome of net profit. What is going to be our bottom line at the end of the day? What are we as business owners taking home? So employee cost is a big one. Now, where lots of people go wrong is they do their employee cost calculation when they first set up the software, and then they don't tend to do it much sooner after that. It is really important that you continue to update your employee costs. Every time someone leaves, your billable overhead, your billable hours across your business has gone down. Same with whenever anyone starts. If someone's been given a pay rise, if someone's gone from casual, there's all these changes that can really affect those costs. So my biggest advice is, depending on the size of your business, I would say if you're, less than 10 staff with not a lot of changes, a minimum of every 6 months, you need to be looking at these employee costs. If you're a little bit bigger and there tends to be a bigger turnover in terms of different costings, then every 3 months, it should be a non-negotiable task that your team do. Supply invoices. Now, I've got a note here because this is something that often people ask, and it is, are purchase orders part of my cost? And the answer is no. A purchase order is a committed cost, meaning, yep, I've committed, I know I'm going to buy it, I've requested those goods, but it's not an actual cost until you've received a physical copy of that supplier invoice. And that's very reflective in the system. So the system will start to accrue it as an actual cost once that supplier invoice has come in. And we're going to talk through a little bit about what the importance is of having those purchase orders. I think that's your next slide, Bryn. What's the importance of having those purchase orders and being able to match those supplier invoices against it. The next one is your contractors. Now, a lot of people normally just encapsulate this with suppliers, but a lot of these systems actually have some really nice functionality to bring those contractors out and independent to suppliers. And one of the reasons why I really like to do that is because contractors give me a really good pulse on the business. So when I need a lot of contractors, I tend to know that we're in a busy period and we potentially could look at hiring more full-time staff to keep my costs down. And so I can start to see far more specifically what I'm spending on labor versus what I'm spending on materials. So that split of costs is a really nice allocation. And then you banged on about this, and I'm so glad you did, Bryn, because stock allocation, and I'm sure everyone's sick of me talking about it, but it's something that I just keep writing home, and it is so important because, like you said, right, they don't count their stock, and it's hard. We get it. I've done a lot of stock takes in my time. It is a painful process. But what happens is when that stock isn't in the system and therefore isn't being allocated to the job, you end up, as you described, as a lumpy P&L, which made me chuckle. So you end up with this profit and loss showing, oh, we've made a great gross profit, but you've not taken into account the $1,000 of stock that you've just pulled out of the yard and allocated to that job. And vice versa. You might have a job where you allocate overstock and you don't take that stock off the job, and now your P&L doesn't look healthy at all.
And there's also, missing stock and redundant stock potentially, and that's if it's sitting on their balance sheet and it might be showing incorrect values. And I mean, missing stock's a big one where a bit of cabling here and a bit of cabling there, but if you add that up over the year and you have 15 employees, that might start to turn out to be fairly large kind of value.
Mm-hmm. Yep. And look, a lot of people say to me, well, Tiff, it's, what about my consumables? And I'm not asking you to do anything that's not operationally sound. I get it. We're all running businesses. It's hard work. So when it comes to consumables, there's a lot of ways that you can manage that process without it being so laborious. So when it comes to a roll of duct tape or, a bottle of silicone, it's a tube of silicone. It's not about, okay, let's make sure the guys are allocating exactly that 200 mil of duct tape. It won't happen, right? We're going to ask them to do something that's impossible and then nothing will get done. We're all familiar with that. So have a process where you've got a consumables allocation sitting in stock. Have a consumables item that you've got $300 sitting in the storage device that has been properly allocated. And if you need help, we can walk you through that. And they're drawing down on that one consumables item for a dollar value. It might be $10 a job, might be $20 a job. But you're still achieving that and getting your high ticket value stocked items on the job, as well as your consumable component. Because Bryn, you probably know better than most how much consumables start to add up.
Oh yeah, 100%. And I think what you said is the best is have some process and have something. Keep it simple, make it as commercially easy as you can. But if you don't have anything, then it's a failure. Where at least if you implement something, you can tweak it as you go, and then you can probably get it more towards being a proper process. But yeah, I think at the start part's measuring that stock and having some system in place, isn't it?
Oh, absolutely. And I see this where people go, they've got the best interests and they're like, right, we're going to implement stock and we're going to do this properly. And then they start asking their techs to allocate every screw. And we all know that's just not going to happen. And don't forget, these guys are the only guys that are making you money, or gals. They're the ones making you money. So we don't want them to spend all of their time sitting there pulling screws out of a mobile app and allocating it to a job that's ineffective. So write out your process first and ensure it's something that suits the technicians, but still puts that information back at office level that can be tracked and measured accordingly.
Yep, 100%.
Yeah.
All right, let's move on to the next point. So, yeah, what we touched on the process, didn't we? So we just said have a process in place. So I guess what I was starting to do here is how do you manage your jobs and what are those systems and processes? So, and I guess the process for job costing, and it might be different than how it's done here. Your process might be individual to your business, but I'd probably encapsulate most of these points, which is, you start off with your job, which is entering all your purchase orders. So you'd have your labor, your contractors, your materials, and then obviously you'd issue those purchase orders out to the respective suppliers. So, those purchase orders are going to go out, and then it's probably going to be, if you're a builder, you're probably going to do that based on progress claims. So you might have, stage number 1, stage number 2, stage number 3, stage number 4. Obviously, you can't enter out all the purchase orders for the whole job. You're going to kind of, if you're using Buildertrend, there are a few using Buildertrend, you're probably going to schedule that out over the course of the job and when those purchase orders are going to rise out and at what times they're going to go out. Obviously, with the purchase orders, they're all going to have some type of job number that you use for materials. So one of the biggest challenges I see, and Tiffany might see this as well, is that some contractors might buy materials in bulk for a number of different jobs. So then they say, well, this is going to be a challenge. How do I break this down by job number? So that's one of the first challenges I've seen. And I think it's the same as what we'd already talked about, is have something in place that you do for that. If it's consumables, as Tiffany said, it probably makes sense to just try and allocate some amount of that consumable onto the job. And just your bigger ticket items, you have the job number for those materials, because it's not commercially practical to kind of try and break down certain materials to each job. Then, yeah, your employees. So if they're not contractors and they're employees, make sure they're entering timesheets per job. And also, I know Buildertrend has the mobile application. I know there's a couple of NextSpheres on here that have the mobile application, and SimPRO has a mobile application. So make sure they're out there and they're using the technology and entering the times straight into there to make less time for the administration team to be able to put all that information in. And then the contractors issuing invoices per job. So, I mean, what I'm seeing is a lot of these job management softwares are creating their own automation tools. And you also have Receipt Bank and kind of HubDoc, where they can actually look into Buildertrend, look at the purchase order. If the bill comes in, matches purchase order, it can automatically sync that over through an approval process. And then anyone that doesn't click onto that process has to go back to the supervisor, estimator, or admin team to find out why the bill is more or less than the purchase order. But obviously, the more you can do that, because a lot of clients that come to us say, oh, why do we have to do these purchase orders? That's creating a lot more time for us. Can't we just put the bills straight into the system? And my advice on that is that doesn't really work. Tiffany might have more advice around that as well. But my advice is it doesn't really work because it makes it less scalable. Once you
Totally.
Yeah. So I think you need to stick to the process of issuing the purchase orders and then trying to create some automation on the back end to save some of the time. I don't know if you have a point to add on that one, Tiffany?
Yeah, I couldn't agree more. I think the scalability is something that really gets missed, and it's all well and good when the business owner is the one, requesting the goods, and it's easy because you know that what you want is the money you're willing to spend. But it's a lot easier to spend someone else's money. So when you've got other people raising purchase orders on your behalf or ordering goods, it's really a good idea to have that purchase order system in place so you've got some level of control over that. And like you said, a lot of these softwares now, EasyBills is another one to add to the HubDoc collection, whereby they have approval processes, right? They tell you, it goes through and says this is more or less than what you said.
I've noticed with a lot of our builders, if the purchase orders are pretty accurate, most of the bills coming through match. So, with 93% of the bills coming through, we generally automate, and then it's only 7% that actually need to come up and find out why the electrician's charged more than what the purchase order was. So,
yeah.
And then on the back end of this is obviously inventory WIP that we've spoken about that already a fair bit, but you know, having those set periods where you measure it, like for a builder, you might only report your WIP quarterly because it might not make sense to try and drill down into that every month. It might be, but it's having that set period where obviously you're doing that stock take if it's inventory, or you're doing that WIP process, which is more for the builders, but having that as a set period. And then, yeah, obviously allocating the stock correctly to the jobs. So that comes down to that consumables and other inventory. And then the reports can be produced on job data. So, you know, as Tiffany said before, you might have a supervisor, or you might have different key staff that you want to show the results to in GP per jobs. So, you know, if you're not doing this successfully and the GP looks higher or lower than what it really is, then you could be rewarding them on the wrong figures. I think I was just going to launch another poll, which was how many people are currently measuring WIP or inventory.
Good question. Be honest.
Let's move on to that one. This is a quick, just a yes or a no. Like if you're currently measuring your stock or inventory, just a yes or no. Or if you're currently measuring your WIP, if you're a builder. Yeah, wow, it's a little bit surprising, Tiffany. So
Tell me.
well, there's 90% are saying that they're not currently measuring their WIP or inventory.
Wow, 90%.
Yeah.
Okay. It's
a
lot, isn't it? But it's
That'd
hard.
Yeah.
It's by far one of the hardest things to set up. And people don't believe me when I say this, but once it's set up, it's totally automated, right? The process is you do your initial stock count, and then every purchase order you raise to stock gets allocated automatically to stock, and you train your technicians to pull it out of stock and onto the job. And you have this cycle, this life cycle. But it's that, you know, you got to eat the frog first. It's not necessarily easy to count the stock.
And it's like everything, isn't it? I mean, it all comes down to that preparation part. If you've set it up and prepared it properly, then as you say, ongoing, it's not actually that laborious. But if it's not set up, it can just seem like a nightmare process. So I am, you know, 92% of people on the webinar, I'm just going to end that poll now, but 92% of people on the webinar aren't currently measuring their stock or inventory or WIP if they're a builder. And I know with builders, the WIP is a really hard one as well. But if you set it all up, if you're using Buildertrend, and I know there's a couple of next years, if you're using those products, generally once it's set up, as Tiffany said, they'll actually do it for you and produce the report. So definitely, I think there's a bit for us to touch on that, Tiffany, that 92% aren't currently measuring.
Isn't there? I was about to say, you know, if you are finding any major pain points, and we've got a couple of minutes at the end, throw them into the chat. I'd love to know, is it just a time factor? Is it, you know, kickback from the rest of the team and just not doing it? Or I'd love to know some feedback around why those numbers are so high, and maybe we can give a few tips to get that over the line today.
100%.
Hey, Christmas shutdown, great time to count stock. So the types of reports you should be reading, let's flow on into this. So look, this list of reports you can pull in most of these systems are endless, right? There's so many, and it often becomes overwhelming because you don't really know where to start. So I've pulled 5 reports that I think you guys should be looking at quite frequently. And I know, Bryn, you're going to go through and talk about the frequency of those reports in a sec. So one of them is the job WIP report. This is a no-brainer for me. Obviously, if you're a business, some of the electrical or the plumbing clients on here who run a really quick residential turnover service sort of business, then the WIP report won't be as critical to you, because by the time you've looked at your WIP report, you're turning it over and you've invoiced the job. But for those larger jobs that go anywhere over a week and some up, you know, months and months, this job WIP report is really important because you start to track, where are my costs at today? Where did I think my costs were going to be? And how much profit am I making on the job? And it also looks at things like your billing, your customer billing. So have you invoiced enough? So there's a couple of other reports alongside that WIP report. One of them, and a SimPRO specific report, is called Cost to Complete, but Buildertrend has something very similar. And the Cost to Complete report shows me exactly that. How much money have I got to spend until I can finish this job? So there's some really critical numbers there to help you with your cash flow. Your job profit and loss report. Now, this is absolutely something that should be looked at all the time. This is going to show you how much money you've made on every job. And it's quite important to look at this from a GP perspective, particularly if you've got managers sitting in those divisions on your behalf. So if you've got someone running your maintenance team, you can look at this profit and loss job report for jobs invoiced, say in the last week, and you can start to look at what is the total GP across those jobs. So it becomes a really critical number to make sure that you start to identify some things that might not be accurate. For example, if there's 100% profit, you know that something's gone astray. We haven't allocated stock. The technician hasn't clocked on and clocked off. But if it's if it's a massive loss, then it's also something that we need to be reviewing. Profit and loss reports, and you'll talk a little bit more about this, but this is something that you would look at on a bit of a larger scale in terms of time. This is across the entire division. So really important, and Builders, yours is obviously quite specific in terms of you're running projects relatively similar, but you may have different buildings, for example, residential homes versus commercial buildings. And it's the same with the tech space, in the trade space. So if you're doing service work versus maintenance versus projects, how can I see each of those divisions and start looking at the profitability of each? Because there's some pretty interesting data you can pull out of that. Is your residential division making the most GP and taking the less amount of time? Great. Where should we focus our attention? So some good business decisions can be made off that profit and loss report. Stock allocated and unallocated. If I went into any of your systems now, these reports would look horrible based on the feedback of the poll we just got, Bryn. There would be a lot in the unallocated report. So that's part of the process of getting your stock set up, is making sure that report's cleaned out. But this comes down to showing you, has stock being allocated? So we start to see, is it the stock on the job that just hasn't been used by the technicians? If not, fantastic, let's take it off. It's not an estimated cost. Is it that we just haven't allocated the stock accurately and it's a training issue? So there's a couple of things there that those two reports will really help you look at. And then finally,
with that stock allocation, like if you're, depending on how you're doing your reporting, but if you could be going for bank finance, or you could be reporting to a regulator, like a state regulator, and if your balance sheet doesn't actually, if you've expensed everything and it doesn't actually show your stock on hand or your WIP, what it does is it makes your balance sheet look potentially not very strong. So you could be going for bank finance, and the bank's looking at your balance sheet saying, oh, we don't think we're going to lend to this client because they're in negative equity or not much equity. And the reality is you might have 200,000 in WIP, or 120,000 in stock, and 120,000 in WIP. That makes a massive difference on your balance sheet. And I see, the reason I point that out is I see this with builders. Probably as the poll went, 90% aren't measuring their WIP. So I see this, nearly every day.
Yeah. And I love your insight here. It always is so interesting to me to be able to share, have you share that with our clients and go, what is the long-term implications of this for your financials? Are you hamstringing yourself and not, affecting potential future finance? So really interesting. And then the last one that I had on there is your supplier purchase reports, including back orders. This is a really nice way to just make sure that you've obviously got everything that you've ordered has come in. Anything that's on back order you may not need anymore, or it's been cancelled, so that should be removed from the purchase order, because otherwise you've got these committed costs sitting against the job that you don't really want. And it's also a nice report to do some negotiating with your supplier, if I can say that quietly. If you can go to them and say, well, hey, we've sent you a few purchase orders in the last 6 months. How about we talk about that discount? It's not a bad tool to do that. So think outside the square. Definitely use these as a bit of leverage to help you guys get that GP number up.
100%. Yeah, that was some really good points. What are we on? So yeah, and then on the back end of the reporting is obviously, and a lot of people ask this, firstly, it's what reports do I look at? Secondly, how often do we review them? So, I mean, I would, and this is, there's no absolute authority on how often you should be reviewing them. As your business gets bigger, I would say you will review more frequently. So, I've had entrepreneurs that will view money in, money out on a daily basis, but at a minimum, you should be reviewing your profit and loss balance sheet weekly, so you should have pretty good vision on where you're at in terms of that week. on your profit and loss, and I throw in there your balance sheet as well, because you need to be looking at that balance sheet strength. And that, obviously, Tiffany talked about goals earlier. So you might have long-term goals, which are 3-year goals, broken down into shorter term, which is maybe 1 year. But then you need to break that all back down to, what's our weekly kind of target to hit that 1-year mark. I know different people might bill differently, so it might be certain metrics in those that you look at. But yeah, I think weekly as a starting point. And then probably at the end of every period, which could be monthly for a bigger business, or quarterly for a smaller business. So that should, your weekly one might be a 15, 20-minute review. But then at the end of every reporting period, that probably should be an hour and a half, 2-hour meeting. And in, like, my advice to that is you should have an external advisor that sits in on that. So I'm obviously accountant by trade, but even with my own business, I have an external advisor that will sit and look at the figures with us. And it doesn't need to necessarily be an advisory board. It just depends on the size of your business. But to have somebody that's non-emotionally attached to the figures, and also somebody that might point things out that you hadn't kind of realized or hadn't seen before, that will all help you improve the performance of your business. So, I'm not going to spend too long on this, on the actual frequency. I mean, first of all, you should be reviewing the reports, and then the frequency will come down to how you want to run your business effectively, or how the management team wants to run it. But these are some good points on just a set of scale and what you should do.
Yeah, and the only point I'd add to that is the biggest roadblock that I see a lot of our clients come to us with is, I get busy and I don't have time to log into the system and look at these reports. A lot of these systems, you can actually set yourself up so it emails you the reports.
Yeah.
So if you're finding you're just not getting the time to jump in and physically pull the report, either put it in your calendar so that you've set yourself a time and a day every week to do that, or have it email through to you.
100%, the calendar one. And if you're doing with external advisors, whether it's a coach or an accountant or whatever, there's a bit of accountability around that then, because then, you know that you have to go to that meeting with that accountant or with that coach or with whoever the advisor is. You kind of know you've got to look at your reports before you go there. So having that accountability can be really valuable as well.
I don't know about you, but every time you start tracking the numbers, they seem to trend in the right direction right? Where your focus goes.
100%. And when you stop tracking them, everything seems to go south, So, yeah, 100%. It's just a matter of that reporting. And it makes, when you bring the accountability onto it, and then you start to actually see trends in your business and go, hey, hang on, why am I paying X, Y, Z for that? Or, so I've firsthand, a lot of our clients will come in and see us quarterly or monthly. So I see that firsthand all the time.
Yeah, absolutely. And just quickly, the last thing I'll say about reporting before we move on to the accounting data sync is there's also some great reports that you can use for your teams. If you've got people running the divisions, set their KPIs around reports that are easily trackable outside of your job management system, that are easily reportable, and create a dashboard of reports. In a lot of these systems, you can do that. And you can click a button and you can see the numbers that you want to see, presenting it to them in your weekly meetings. So it holds them really accountable to numbers versus, so definitely use those reports, not just for your own benefit, but to build your team around you.
Yeah, numbers don't lie. That's what I've always learned in accounting.
Neither do big hips, apparently.
No, I think that's close. I think
right.
Neither of them lie. When your jeans stop fitting, then there's a problem.
Results of COVID. I'm sure we're all experiencing that. Look, the last thing that we were talking about, one of the last points, should I say, is the transfer or sync from your system to your accounting software. So this is one of the best features or functionality of these job management softwares, is the ability for it to just push over to your accounting package. It's going to push over the basic data. So your customers, your suppliers in terms of their cards, so their basic information, your customer invoices and your payments. And in some instances, the customer payments actually has a two-way sync. So you can actually mark the payment in your accounting package and push it back into your job management system, which helps when you've got all these great tools to do your auto reconciling. Your supplier and your contractor invoices. And then in some systems, you can actually transfer over your stock levels by way of journals. So a little bit more complex. There's a lot more to that, which I won't bang on about today. But if you do want more information, do talk to, give me a call. The idea of that is that when you allocate stock, it'll push itself over to a journal to make sure it comes out of your balance sheet, as Bryn was talking about earlier, or into it, depending on what transaction you're doing. One thing that I will reiterate here is that your job management system is designed to push over a minimum amount of data. It's not designed to push over the whole shebang, right? So when we're talking about a customer or a supplier invoice, it's not going to pull over every single line item as you've presented to the customer, or even as you've generated in your system. It is generally going to pull over a summary, so one line item with the total figure. And the reason it does that is my points below. Your job management software is designed to help you pull financials on your individual jobs. Your accounting package is high-level financial reporting. So use your job management system for that. I see a lot of people still stuck in the, the habit of using your accounting system to try and track where your GP is sitting. Yes, of course, it's going to have that final number there for you, and it's going to be completely accurate with what you've presented to the taxman. But your job management system is going to give you the nitty gritty on why that's your GP. What job has been affected by it most? Is it an inventory issue? Is it an employee issue? So use your job management system to really get that granular level of reporting, and keep your accounting package high level. It doesn't need to be much more than that.
Yeah, no, that's a great point. I always say macro and micro. So the
Totally.
job management software is the micro level, and then the accounting is the macro level. So that's for your end of month or your end of quarter reporting period. That's what you're kind of looking at. And maybe if you're using Xero, and you're at home, you're looking at your profit and loss weekly kind of thing, or however you do that. That's kind of the manner that I'd do it in as well.
Yeah, great.
Okay, so the importances and benefits of job costing, and I think we've probably covered over most of these pretty well. So I'm not going to go on this for too long, but obviously the first point is you can improve your profitability. So if you're not tracking it, if you're not measuring it, you're going to find it hard to improve it. And as you scale up, maybe when you start out and you only have 2 guys on the team, you kind of know by feel where you're making money and where you're not. But once you have 15 guys on the team, absolutely not scalable. So you're not going to improve that profitability unless you have some type of package in place. Control jobs from the estimating stage. So Tiffany made a great point on that before, where when it's just you and you're a builder and you're doing the estimating and the supervising and everything, it's easy to do that. But once you start hiring an estimator and you have admin and you're running 5 or 6 jobs at a time, what happens is that you no longer can be involved in every stage of that. So, from your estimating stage to the operational stage, if you're raising those purchase orders, as we've said, that everything's going to flow back. And, is it a problem with my estimating, or is it a problem with the operational team if we weren't making gross profit per job? Yet again, if you're not tracking it, you're not using job costing software, you're not going to be able to do that. There's only a certain level you could use spreadsheets to. So it's not scalable. That'd be probably the biggest point that we'd be making is think of everything with your business with an overall view, or look into the future in your business and make decisions based on that, and on how you can grow that business. And if it's not scalable, it's just not going to work as you get bigger.
Completely. I'll bump in there quickly. I heard a really interesting quote this morning. I was listening to it, and it said that every time your business triples, your processes and your processes need to change. They break. And it's a really good point. When you go from 1 to 3, what you were doing as a 1-man band is not going to support you as a 3-man band. When you go from 3 to 9 people, what you're doing at 3 people is no longer sufficient. So like you said, plan up, think about where are you going to be in 12 or in 24 months in terms of the size of your business, and build your processes to suit that, so you don't have the headache of it breaking when you're mid some very expensive projects.
Yeah, 100%. It's not something that you do and then you, as you said, with the employees and measuring their costs, you can't do it once and then put it in your system and then you don't look at it for 4 years. And I've seen that with clients on SimPRO before, where they've come into me and then I've started looking at their per job and everything like that, and they hadn't reevaluated those employee costs for 3 years or 2 years or something along those lines. And obviously they've grown a lot. So their overhead cost now is a lot higher than what it was when they started. So I guess this is the exciting point, Tiffany, all these softwares.
I know there are so many, and this, the 5 we got on the screen are such a small sample set of what builders and tradies can use, right? The construction industry is just swamped with software.
Yeah.
And just the points we've got there is make sure it's appropriate for your business. I've done a lot around drawing out your workflows, really understand what your business needs in order to operate every single step along the way, to really understand if the system supports that requirement. And make sure you have internal resources to use the software. Make sure your team are prepared. Ensure they understand what they're meant to be doing. Build your own workflows, or have someone else do it for you, so that it's mapped. And when you're onboarding people, it's very easy to hand it over. And something you and I were discussing, Bryn, is that we often see people get frustrated or grow out of consider themselves growing out of a system when they actually may just not know all the functionality of the system they're using. So sometimes the devil you know is better than the one you don't. So make sure you do your research on your current system before you start researching others out there, because it's likely there's functionality you don't know about.
I think I was reading somewhere, or I just made it up, I can't remember which one, that most people using systems are using them 20% of the capacity or of the allowable usage of the system. And
you are 100%. We've got 33% against the customers we've used is the average utilization rate of the software.
33%, yeah. And I know we use a job management software here ourselves, which is a tax software, an internal thing. And we're accountants, we're pretty good with systems, and I know for a fact we're probably only using it at 30 to 35% ourselves. So it's not something you can do and then just put in the back drawer. You've got to have a consultant every quarter almost to come and show you how to do things better, or what you're not doing correct, or there's so many more things you can do with your system before you need to go to a new system. And I think that's a massive point. And the other one I'd add on there is the internal resources. I've seen so many people implement SimPRO, for example. I'll just say SimPRO as an example, and they have an admin that was using Xero and kind of scheduling the guys, and then they just kind of say, oh, here we go, I'll just give the SimPRO to the admin as well. And the problem is, when you implement a system, you automatically need more resources, whether that's internal, external, however you cut that up. It's not fair to just create all this extra work and then throw it on the person that's currently there. I think you need to do some planning around, okay, we're going to do job costing, we're going to use XYZ system. That means we're going to need XYZ resource. So I think that's a big point, because I've seen a lot of people that have come to me and said, oh, Brendan, now I'm just swamped. I've got to enter all the job costing, plus I've still got to do my Xero stuff, plus I'm now scheduling all the guys. It's a lot of work for me to do everything, and the guys don't understand it, or the girls don't understand it.
Yeah, 100%. And it's often confused, right? And we certainly don't sugarcoat anything. It is hard. It is hard setting up or utilizing a system more effectively, and it often takes a little bit more work initially, but then it does start to die down and automate. So just make sure your team are prepared for that. It is, even when you're optimizing, I mean, that's predominantly what we do, right? We walk in and make sure people go from a 30% utilization rate right up to a 70 to 80, even 90%. In this trades-based business, but it is hard. It is hard for those teams to get out of their habits. So, and I'm sure if you on the call could relate to that.
The efficiency at 70% from 30 would be amazing. And I had one of my associates set up a software company, and he said to me, think of it as we take people away from the business. So if you go from 30 to 70, most likely, you've cut a person out of your business, or, almost in terms of costs. Because of the efficiency you would have gained from doing that. And then, the last one I had on there was just the investment in the system. Like, do your due diligence and find out how much systems are going to cost. If you have to pay an advisor to come in and do some due diligence and give you 3 options with costings, and that costs you 2,000 or 3,000, or however much that costs you, that's money very, very well spent. Because if you just do a demo and then say, oh, this is the system for me, and just jump in, it's very hard to undo that, and that can be a really, really costly exercise. So you might balk at the fact of paying 3,000 to 4,000 up front, and it might cost you 40,000 on the back end. So I've personally had a client implement a system that cost them 30,000 and then get rid of it after 12 months because it didn't do what they wanted, and they changed to another system. So, and that's not a one-off. I've seen that, and that's specifically in the shop fitting space. I've seen that a few times. So
yeah, it's scary. It's expensive. It's an expensive transition, and that's not including staff wages, right? Like,
imagine, and all the time
yeah.
they've spent doing meetings and everything else that they do. Yeah, we're coming up to the back end of this. So basically, I'll just run through the services we offer, and then we'll do a bit of a Q&A at the end. Anyone that has any questions, they can ask. But basically what we offer at the firm is we do offer resources. So if you need somebody to be entering those bills and matching them to the purchase orders, we can take care of that function for you. We can create checklists of the accounting functions, workflows just for the accounting finance function of the business. And then we can deliver those reports on a timely manner. So if you want to do monthly reporting, quarterly reporting, we can take care of that and make sure that it is accurate and that you are measuring the WIP and the inventory and everything else if that's required. And off the back end of those reports, because one part is how do we get the data into the system? But the second part that businesses encounter, from my experience, is how do I interpret the data now? So, and how do I make decisions based off that data? And that's where obviously accountants are a good place to come into it. So they're the kind of services we offer at the firm.
And us, I have talked a little bit about it, but we're all about walking in and really understanding what system you're using and how your business operates, and taking you from a 33% utilization rate right up to that 70 or 80%. And then we obviously do a lot of system maintenance, updating your overhead costs, as we talked about, updating your catalogs, helping you with the stock. So anything on an ad hoc basis that you just need to keep maintained in the system, which is, health checks, every 3 to 6 months, jumping in and making sure your system is clean. There's a lot. So anything system related from a job management perspective, we can certainly help.
And I'd just say that 33 to 70 odd percent, as I said, that would almost be a full-time employee or more for some businesses, being able to
Absolutely
get that efficiency out of the system. I know like I said, we constantly, almost monthly, do in our system. And every time we do, we find out things that were taking a lot longer than they needed to, and we kind of fix that. So from 33 to 70 odd percent is massive.
Yeah, it's some great stats. We're really excited.
So just some contact details here. We've got the email addresses, obviously websites, phone numbers. Like you very easily, you'll be able to contact us on the back end if any of this is of interest to you, if you need help with any of these areas. So feel free to reach out. I'm comfortable to do a 5-10 minute call. That's not going to cost anything if you just need some advice, and I'm sure Tiffany would be able to do similar off the back end of this as well. So feel free to reach out.
Yeah, absolutely. And, we do a full, sort of deep dive into your system and your business. And I always like to help those that have made the effort to jump onto these calls. So reach out if you are interested in that.
100%. And now we'll just open up for a quick Q&A to anybody that did have any questions from anything that we've discussed on there. No question's really a silly question. If I don't know, I'll just make it up.
It's all right. There's two of us. There was a couple that have come in that I answered as we went. Maybe we gave all the info. It's a sign of a good webinar, isn't it?
Yeah, I think so. I mean, I noticed through the webinar that nobody's really jumped off. And one of the things that we've noticed, or with a lot of our clients, is that job management's such a massive piece in their business, and it's such a complex piece of the business. So it doesn't surprise me that so many people were interested in kind of coming on here. And that's why, at Tradies Accountant, we thought it was really good to team up, Tiffany, with you, because this is your skill set. I mean, our skill set isn't actually job management systems. It's more so interpreting data and the financial side, whereas you are really able to kind of come in and give all that advice on how to get it all set up and do it all properly.
Yeah, it's great. And we love what we do, and we love being able to work with people like you that can interpret the numbers, and we've got somewhere that we're comfortable feeding our clients through. So yeah. It's exciting stuff.
Yeah, no, very exciting. We haven't had any questions come through yet.